Ladies and gentlemen, help me welcome Pierce Crosby, General Manager, TradingView, to the stage.
My name's Pierce. I've been with the company for about 5.5 years now. My job is to basically run product strategy as well as business strategy for the team. But globally, we have a team now of about 500 people. So you name the country, we probably have somebody there. And as always, I encourage people to actually reach out. So if you live in Hong Kong, if you live in Australia, if you live in Brazil, feel free to talk to our team at any point in time. In total, I think we have about 50 offices, something around 50 or 45 offices, globally deployed around the world. So I was here last year. It was a fantastic conference. Obviously, it's fantastic to see the size of the turnout, you guys. I mean, obviously, this is a great event. So what I want to do a little bit is talk about the infrastructure of what you guys are actually using from a platform perspective to give you a better sense of ultimately why TradingView is important and why we play a role in the ecosystem overall. So unfortunately, I'm not going to tell you what to buy or what to sell. It's not my job. And ultimately, always be questioning people who are telling you what to buy and what to sell in general. So what I'll focus on is primarily the infrastructure and the ecosystem that power the applications you guys use every day. To be clear, of course, everything that I do here is my own doing and my own research. So disclosures are always important. And we'll talk a little bit about disclosures actually in the coming presentation as well. In terms of infrastructure, I do want to make sure everybody's aware, not only is it important to be able to trade the right instruments, but it's also important to know who you're trading with, how you're trading, and ultimately make sure that you're choosing the right platforms as well as the right trading strategies. So in general, talk a little bit about history, how we got here, current market conditions, who's the biggest players, who's not, biggest players and biggest contracts, what actually trades these days. I don't think people even realize $7 trillion of assets are traded every single day in the FX world. And in the CFD contract world, it's about 1 to 2 trillion comparatively. So history. So before FX became very popular, we had a pegged currency system, meaning all currencies were locked at a fixed rate, and that was all locked against gold, right? And so way back in the day, I mean, you basically were not arbing Euro USD because there was literally no arb. The actual interest rate was fixed, so there was no actual buying a pip, selling a pip. And after Bretton Woods, which is kind of a huge conference that came as part of World War II, we broke that system completely. And we went from fixed rate interest to floating rate interest. And thus, the FX industry was essentially born as a result of that. You could still arb various, like strange contracts around the world, but these are the most liquid instruments that were all fixed to each other's currency peg. And as soon as we depegged that, it was an extreme explosion of the industry overall. You guys might remember this baby. So this baby was like the most famous celebrity on TV. Obviously, nobody knew his actual name, but more or less, E-Trade and a lot of technology platforms came online in the early 90s. And this was a result, in part, due to the fact that FX trading became very popular. So in the US, ultimately, FX was regulated by the CTFC and the SEC. And both of those more or less were responsible for making sure that people really were trading with who they were trading with. There were actually regulations around this stuff. In the financial crisis, things changed a lot for FX, and not just FX, but CFDs. Pretty much everybody in the industry doesn't realize how dramatically the industry has changed over the last 20 years. And initially, it started where FX was somewhat regulated, but not really regulated. And during the financial crisis, we had the Dodd-Frank Consumer Protection Act, which basically came out to increase the reforms and protections around individual customers for many reasons. Notably, things like people actually giving you risk disclosures when you sign up for their products. And in a lot of cases, that doesn't exist. It's surprising, but even in today's times. As well as things like segregated funds. So in some brokers around the world, they actually have one giant fund of which you own a small percentage, whereas in a regulated environment, you actually have segregated accounts and segregated funds overall. So the financial crisis changed pretty much the entire industry in that sense. So what's happening today? As a lot of you know, and we talked about this a little bit last year, which was pretty eye-opening to me actually at the time, that many people love trading overseas or trading international markets because there's a lot less restrictions on things like leverage or how much margin you can get on your account and things like this. And so people basically think that FX in the US died. or that FX in the US dried up. When the reality is FX is actually still growing in the US, even in a more regulated environment than it was even 5 years ago. And so this is general traffic and interest levels in the millions of users. But more than 130 million people in the US have searched for Forex or FX investing over the last year. That's literally a third of the country, just so you guys understand. FX is growing all around the world still. And even in a very regulated environment, it's very interesting to see that FX remains very, very popular. So meanwhile, overseas, a lot of different stuff is also happening. Some may know about MiFID, which is a huge regulatory overhaul, came in line with the Dodd-Frank Act as part of the financial consumer protection of individual customers, especially around things like FX. Now, Europe has always been much more heavily in FX than the US, of course, because there's a lot more countries, right? So, whether you're trading Swiss franc with euro, whether you're trading all these various instruments that you guys know well, this was always very popular. But again, MiFID came in and said, listen, we do not want to give our people the ability to trade 500 to 1 or to have an infinite margin account. Because at the end of the day, well, as we well know, there's a ton of potential downside to the scale of leverage. So MiFID actually pulled all of Europe to very much in line with US regulations as well. And again, this is not that long ago, literally like less than a decade. So the world's changing massively for FX, becoming much more in line with generally what is considered regulatory control, but yet still more popular than it was before. So there's this other portion of the business, and what I call is the banana FX, but basically offshore FX, which has obviously exploded. Both Europe is kind of contracting, the US is trying to break down regulations more, and so what you have overseas is a ton of people who basically specialize in building FX businesses with no regulation. Well, why do people want this? What's the problem? Why would I not just sign up with the FX broker in the US? A lot of these things are only available overseas. You guys may know a lot of this, but some of the things you might not know are very important when you're actually selecting a brokerage that you're going to use. Notably, things like risk disclosures, notably things like leverage rules, how much internal hedging is actually happening versus are they actually selling this out to another broker-dealer to manage all this risk? In a lot of cases, what used to happen in the US and in Europe was people would internalize a lot of the trading volume such that it would never see the open market. Because they knew, based on what they'd seen previously, you were 99% likely to lose on that trade, so they would actually take the other side themselves. It honestly created a really, really interesting environment where brokers wanted people to trade really risky instruments because they'll actually trade against you in real time. Overseas brokers became very, very popular for this, and there's very little that we can do as the US country or is Europe in response. So who's leading the market though today, right? You have the overseas guys, you have the Europeans, and you have the US. I mean, I said this at the beginning, but it's literally exponentially growing. And it's amazing to see just how popular FX remains today. But literally 7.5 trillion in volume trading every day of the year. Who runs this flow? So the biggest players today, you might be surprised, but UK basically accounts for almost half of all trading volumes in FX. That's insane. I mean, it's literally, they have become the dominant player, for sure. And again, like I said, because of the European positioning, it's obviously huge. But you can see right behind them, actually, the US. And this was actually pretty surprising to me that we're still one of the #1 players in the FX space. A lot of Europe, you see Singapore basically has taken third. They were previously fourth, or tied for fourth, but they've slightly taken third place. Literally, by a few million, more or less. Who are these people, or like who are they? Who are the actual brokers? These are essentially your biggest players in the ecosystem today. These are the biggest traders in terms of total volume. And what's interesting is that in regulated markets, this data is very, very easy to come by. In unregulated markets, it's basically word of mouth, who's who, what's doing what. But we actually do not know how big offshore trading is in general due to the fact that they do not have to report any numbers. So this is all basically public disclosure. So like Vantage is a good example of somebody who's gone out of their way to say basically, here's all this data we want to share with the community. We want to make sure everybody knows what's going on. But the reality is in offshore, they're not required to report, period. Whereas in the US, you see the top players, they are qualified to report these numbers so that everybody knows how much volume they're doing, how much trade they're doing. So what are they trading? So I just want to give you guys a sense of kind of like what the industry is doing, right? Like what are the biggest players doing? What is the biggest space doing? So almost half the entire, well, a little more than half actually, is just swaps. So Euro USD, Swiss franc USD, Australian USD, and most of the contracts are trading with the USD pair. So very few people are actually trading, say, Euro franc or what's like New Zealand, Australia. Almost all pairs are related back to the US dollar because, again, the more you're trading these very obscure pairs, the more likely you are to get on the wrong side of a trade very, very quickly. But then in terms of spot, people just literally just trading, I want to buy dollar or I want to buy Swiss franc. But swaps are more common. They're just using USD as the other derivative. So these are the most popular pairs. These are the most liquid pairs in the market. I don't think anything will be surprising here. You guys probably know this. But to give you a sense of when you are trading yourself, you want to know, okay, how much liquidity is actually available to me? Because there's a lot of conversations about like, well, the market was kind of fickle or spreads were wide, blah, blah, blah. These are the most liquid instruments globally, trading billions of dollars per day. These are the tightest possible spreads you can get in the market. So it's very important to understand what trades, because that will help you, better basically not get your face ripped off when spreads are, say, 10 basis points or wider. Meanwhile, CFDs have gone through the roof. And again, very similar to the offshore stuff, we actually don't know a ton about the CFD world, other than people who voluntarily disclose CFD trading volumes, right? Most of this, we have no idea. But in terms of the actual revenue that's coming out of this stuff, I want to give you a sense of like how profitable CFDs are for brokerages. On an annual basis, CFDs alone as a trading business, generating about almost $6 billion in revenue for the brokers. That means the volumes are astronomically higher than that, but literally generating $6 billion just for the brokers themselves. And by the end of 2030, it's estimated around $8 billion in revenue generated by the CFD business. Well, how is this so profitable? How are they making so much money off this? The reality is like I said, a lot of this business doesn't disclose. Most CFD products are actually going to be more or less great ways for you to blow up your account. So I want to spend a little bit of time about brokers themselves. So I know a lot of people use offshore, and there's various reasons that they love using offshore. But I want to make sure that people do really a serious gut check, if you will, when you're choosing your broker. Why? Because a lot of people will sell you things that ultimately are not good for you. And if they are a broker, they're looking for products that are good for them. Well, what products are good for them? The likelihood of you making money also depends on the livelihood of those brokers. These aren't really so much your friends as they are your business partners. And I want to make sure you understand the relationship there. Like, these people are here to make money from you, not to make money for you. There's a very important difference. And I don't think a lot of people really realize that. In the US, and in the UK, and in Europe, what is required from brokers? They disclose annually and quarterly how many of their customers actually make money. They're required to do that. So this is from IG Markets. It's on their homepage. You literally look at what they're actually doing on their homepage. This is from Forex.com, literally on their homepage. Simply put, straight numbers, right? Like, there's no jokes. And so people are really discouraged by that. They're like, wait, are you serious? And it's important that every broker is required to actually disclose this data. Oanda literally just breaks it out in a spreadsheet. I can go look at Oanda's site right now and see exactly what's happening. You understand exactly the likelihood that people have to actually make money. So if you're using a broker or a trading platform and they are not disclosing, you got to ask questions. This is required. Another thing very important. I don't know how many people use LinkedIn. People use TradingView all the time, but anybody use LinkedIn? Nobody uses LinkedIn. Oh, a couple people use LinkedIn. Do some homework for yourself, some general diligence, right? On LinkedIn, almost every company is available on LinkedIn. What can you learn from that? For me, I do my general research just to understand brand positioning and brand strategy, but that's because I work at TradingView. It's kind of a different business. For you, it's very important to understand who works at the companies that I'm actually working at, or working with, if you will. And as you can see here, like Forex.com, small business. They have 400 people. Very popular in terms of the people that follow them, but 400 employees. It's a small shop, but you can literally look into who are these people. Do they have track records? Have they worked at other brokers before, right? It's public. Oanda.com, you literally can see They have almost 700 employees around the world. And clearly, you could see these people's profiles. You could see what they're known for, see their history. IG Group, I mean, they literally have 2,500 employees, right? It's a business. That's a big business. And comparatively, I will say, if you look at a lot of brokers, especially in this kind of evolving space, and you investigate a little bit beyond, just go a little bit further into who these companies are, you'll quickly realize there are very few people actually running these businesses, or more likely, you'll be very hard pressed to actually find who runs these businesses at all. I kid you not. It's very important to do a little bit of due diligence there. Another easy one is marketing. One thing that I've always seen is that for big brands, the only real way to get into the hands of retail investors, go to sports, go to Formula One. I don't know if anybody's been. It's absolutely incredible. But these are great ways to visualize, okay, this brand has actual money. They're spending it in ways that are actually legitimate. And that's where you're going to meet these customers, or that's where you're going to meet the brokers, in very big venues, in very public domains. Comparatively, the number of people in my DMs offering me FX and crypto services is amazing. Like, we're talking in the thousands. I don't know how they figure out who I am, but believe me, they want to sell me some crazy trading strategy, and it is 99.999% going to be absolutely worthless. When you do see these DMs or people that are obviously focused on very much promoting themselves in very, very lavish ways, just take a second, think about, is this coming from a person that I actually think is reputable or trustworthy? Do they have track records? Have they worked at other companies before? Do they work for regulated companies? Period. But it's funny, I just did a quick check. There's a site, an influencer website. I can buy FX influencers, if you will, and literally use them to promote my service. I could literally have no regulation, no kind of background whatsoever, but if I have an FX business, I literally just go online, I could buy people, and then they could basically promote my service. And I don't think that people really realize how easy it is to set one of these things up. I can license MetaTrader or another product. I could pay anywhere from, say, $100,000 a month, maybe a little bit more. I can use some of the third parties with basically internalize flow myself. I could basically stand up a full broker for $500,000. And from there, I can basically go directly to the customer and say, hey, listen, I have a great service, great business. The reality is I could be doing whatever I want with that. And there's no regulation if I'm not in a country that requires it. So what is TradingView's business in all this? What is the, what's the catch here? Why is TradingView talking about this? What's our role? Well, honestly, we don't have a role in this game. We don't. The thing is, we know how popular TradingView is across the industry. And so we basically stand by, if you will, when a lot of this stuff is happening. And it's very important for us to make a very specific separation. This is TradingView. TradingView does not condone, what is essentially unregulated trading in securities. This is what we think about. And honestly, for us, we have a very big business in integrating brokers to TradingView. But the way we think about it is simply, if you don't have regulation, there's, some reason the spacing is there, but you get the idea, no disclosures. Obviously, if none of those exist, we really can't work with you. I run the whole sales team, the partnerships team, the biz dev team. We basically, when we do checks, when we do analysis, if they don't hit a certain number of these qualifications, it's an unfortunate thing, but we have to turn these people away. And how bad can it get? There are a ton of people that come to TradingView every day and ask us, we want to work with you, can we integrate, can we do all this stuff? It's very interesting because we quickly investigate who is this company, what are they known for, et cetera. But literally, one of these companies came to us the day before the investigation broke that they had basically stolen $112 million. So it's there's a total mismatch between them thinking that we will work with them or we won't work with them, when the reality is we do our homework and we have to. We have to for the individual customer. Today, we have about 50 brokers connected. These are FX, these are crypto, these are stocks, futures, and globally, right? So all over the world. Doesn't matter what market you're in, we have a broker for you. What we've done is a lot of the legwork, if you will, to verify whether or not these are legitimate firms or not. And we do this on a consistent basis, and we don't do this because it'll make us more money or less. I mean, honestly, it makes us less money. I mean, the people that offer us integrations to TradingView would pay us boatloads of money, but we simply can't do it. And that's the reality of TradingView. So the best rated for the US. We sit here in the US. We work with US brokers. We integrate Oanda, we integrate Interactive Brokers, and Forex.com. I know these sound boring, but at the end of the day, these are the only integrations that we have live that actually have regulatory standing in the US. And honestly, these are people that are reputable and that we know to have strong track records. And so again, checklists, this is literally what we do. But I think that for us, if I could basically transpose anything from this, it's for me to give you a sense that the homework that we do is homework you should also do yourself when you're setting up your trading operation, or you want to work with a broker, or maybe you have a business, like a trading business, prop trading, or literally trading strategies, auto trading, things like this. You always want to do your diligence, because there are tons of people that will offer you basically way bigger fees. And the reality is that, well, it's easier for them because they don't have any kind of compliance controls. They don't have teams that actually do this stuff day in, day out. So obviously they'll give you a larger percentage of whatever they make as a result. But the guys who may not offer you nearly as much can stand behind the fact that your accounts are safe in a way that few people can. Just a quick check on doing homework, and honestly, I think it's a great kind of moment to think about. And it's lunch, so I'm not gonna keep you guys too much longer. But thank you so much, obviously, and sincerely appreciate you guys coming out.